Hello, welcome back. Today, I'm going to show you how to retire in less than 1 year, earning $5,000 and monthly real estate passive income. One rental, retire in 1 year, and unable to retire $5,000 per month in real estate passive income. Now, some of you are asking, $5,000, that may not be enough for me to retire. I need more money than that. That's fine. Okay. If your retirement goals require more than $5,000 monthly, all right, it may take you 2 or 3 more years to retire. I know I'm not going to discuss what's the definition of retirement. Is it going to replace your W-2 income, or just keep your W-2 income, or and live off the real estate income? So everybody have a number in mind, monthly retirement in mind. So I'm not going to get into that. I'm just going to share this with you at a high level. But I know before I'll give you the scoop, you guys gonna think, oh, this is too good to be true. I mean, this is a scam, whatever. Well, just hear me out, okay? I'm gonna give you some highly conceptual information, but again, this is just a disclosure that I have. I mean, consult your financial advisor to determine uh, your risk tolerance, what is your goals and objectives, and make an informed decision. But without further ado, this new up and coming real estate asset class is what we call a co-living investment model. Is rent by the room. So I know this is a kind of an early stage of real estate investing, but is really growing very, very, very fast. Co-living, okay, rent by the room model. For you guys, for you mom and pop landlords out there, this is perfect for you, okay? And you don't even have to be an experienced investor to do this. You can be a savvy investor, experienced investor, all the hypothetical situation I'm going to share with you. All it requires, you have some kind of down payment. If either you have like $60,000 as a down payment or $120,000 of down payment. I'm going to use two example. I'm going to use two real life investment property walkthrough example. One is a single family home and one is a duplex. All right. So I'm not going to go over, all the intricacies of the co-living investment model. I have done other YouTube videos on that. Furthermore, you can watch on my YouTube channel moving forward. Also, you can if you're first time to my channel, you can also enter my website below and sign up for our daily real estate investment newsletter. Put your email on the newsletter database on my website so you can become a free member of our real estate investing community, the Ye Real Estate Network. So without further ado, let me go through these two walkthrough. I'm not going to go over the single family home. This single family home is a new construction. Now you're thinking most co-living investment model that investors are purchasing right now, they are not the way, not similar to what I'm about to show you. What I mean by that, most single-family homes are conversions. They are renovated from a regular traditional single-family home, like four-bedroom, two-bath, like 2,000 square foot. People, investors go through a massive renovation. You spend 10, 20, $30,000 to convert a 4-2 into like a 8-2, right? 8 beds and two bathrooms. So there's a four bathroom to one ratio, which is okay, not the best situation. But furthermore, let me get this out of the way also. I don't have an exact number, but I would say 95% of the co-living investment in models out there in the country are renovated or just converted from a traditional single-family home. What I'm about to show you is a brand new construction co-living investment model. It's a game changer. Why? Because we build it from the grounds up. Our builder are all in terms of building a building a house that are straight up from the grounds up a co-living investment model. So let me show you this very example as I show you right here. See, this single family home is brand new construction, is located in Jacksonville, Florida, by the way. By the way, moving forward for the next few years, myself, our company and our network and our team, our partner, the builder, we are entering many different markets. Co-living investment model is all over the place, all over the country. We have like 50,000 units, and there's a lot more to come all over the country. Okay, technically you can do it all over the country, but I find it, Jacksonville, Florida, for us is a very good starting point because Jacksonville, Florida is a very, very fast growing market. It was one of the fastest growing housing market in the country. So, and for a lot of reasons but we are building this grounds up new construction co-living model in other up and coming Florida markets. We are in the next year or few years. Again, our network, our builder, our team gonna enter the other market in using uh, grounds up new construction to help our mom and pop investors to buy this kind of property. So let me give a so the future is very, very bright. This is, I believe, is the most exciting real estate asset class. Is highest return, high cash flow you can ever see out there. It's gonna, let me say one more thing. This kind of investment model, if you do it right in the way that we are doing it, new construction, we believe in terms of return, clearly gonna beat the traditional rental, traditional uh, rental, the long term, you rent your rental property for cash flow, hopefully, to a family, to one family annual lease, right? This is a traditional rental. It'll this co-living model in terms of cash flow will 4x the cash flow monthly uh, comparing to a traditional rental. Don't get me wrong, my organization are still promoting uh, brand new long-term renting to one family for cash flow in the best markets in the country, in Florida and in Texas and a few other places that we're promoting. But this is uh, this is amazing, this long uh, co-living model. All right. So with that said, the basic fundamental behind our vision is to when we build a co-living investment model, we built it. We have in this case, single family home, 7 bedroom, 7 bathroom. So we have 1 bedroom and 1 private bathroom per tenant. This is a game changer. It allows us to charge a lot more than a 6.2 or 8.2 with other co-living model space in other part of the country. Anyway, so you know what I mean by rent by room? We essentially this is a like workforce housing, right? We rent for to people who cannot afford, people all over the country. We know about the historic low affordability crisis that we're experiencing, right? A lot of people cannot afford to buy a home. In fact, the target audience, our tenant base, our member tenant base consists of people making like $30,000 to $50,000 per year. So that means they make like $2,000 to $3,000 to $4,000 per month. Okay, those are workforce workers, hourly workers, warehouse workers, and people in a lower demographics, if you will. Uh, and a lot of those people, they cannot even rent uh, a uh, a studio apartment for $1,300, right? So what we provide for them is a clean and safe room in the house, okay, and where they share the kitchen and they share the living room, but they have their own private room, and we charge, typically around $1,000 per month. Okay, so we provide some for as an investor, as a landlord, mom and pop landlord, you are making a difference in helping people who otherwise cannot afford to rent even a studio or one-bedroom apartment in their area, and they come to live in a clean place, in our house. We provide for them, and we provide all the amenities, all the internet, the water, the electricity, everything else. They just they just move in very quickly, and and able to secure a nice living accommodations. All right, so let's continue. So beyond that, again, only, only 320,000. The way you qualify to buy a co-living property is no different than any other property, right? You can buy cash, you can use your self-directed IRA, but my best recommendation is use conventional Fannie Mae lending, investor financing, 20 or 25% down payment, as in this case, right? This case, 320K multiplied by 20% equals your down payment, right? Then if you collect $1,000 per month per room at 7 bedroom, so you're collecting like more than $7,000 per month. Listen, another things look, we have done this already for a couple of years, so we have a track record. Let me give you one heads up. Some of you are thinking, okay, our occupancy rate for this kind of brand new investment model here in Jacksonville, Florida, and in the future market that we are entering into, our occupancy rate are 95%. I repeat, 95% occupancy, and our eviction rate, based on all the results that we have seen for the past several years, our eviction rate for these tenant members are less than 5%, like 1 or 2%. Okay, that's how good we pre-screen the right tenant. And the average length of stay, and this is going to surprise you, per tenant in this co-living rent by the room model, the average length of stay is around 6 to 9 months. We have some of our tenant members who stay way longer than 9 months. They stay for 2 or 3 years at a time. So just so you know, this important metrics I'm just sharing with you. All right, so here it is. When you're all said and done, okay, I'm gonna go from a high level, okay, from high level numbers. At the end of the day, with only 20% down payment, regular financing, you cash flow from day one, and your monthly net cash flow is almost $2,000. Okay, we're talking 13% cap rate and 27% annual the first year ROI, very barable minimal. Okay, now here's the real interesting thing. We also are building a duplex which is 2 unit. Each unit, each side is 7 bedroom, 7 bath, and the other side is 7 room, 7 bath. So total rooms for rent on this duplex is 14. So you have 14 renters paying your rent for you. All right. So this is a game changer. This is absolutely so incredible. The cash flow and the returns are off the chart. There's no comparison to any other real estate asset class. So I rest my case. So this duplex, by the way, this kind of inventory we have is very, very limited. We have only several completed homes. We're trying to scale up in terms of construction with our builder, with our contractor, with our labor, but it's just the demand is so much higher than supply of this type of straight up new construction co-living investment model that we are promoting to our investors, especially for our network investors that are already part of my network. Although people outside from our network can join, as I alluded to you earlier, all you gotta do is contact me directly. My information is at the bottom of the description. And also, sign up for my newsletter on my website so you can become a free member of our real estate investment community. So you receive ongoing weekly newsletter about real estate investing and investment opportunities, such as the one I am showing you. Does that make sense? Okay, so in this case, again, these duplexes is just no one else in the country are doing this. Look at this. This is absolutely incredible. But this is the real numbers. Okay, we have proof of concept. So let's continue. Okay, I mean I don't want to make this video too long, but there will be future information about co-living from our organization. Don't worry about it. Right? You just need to keep up. At the end of the day, at 25, what? 20% down payment, we need to do 25% down payment. So it's a little bit higher than 120K. You're collecting a rent of a $14,000 monthly rent, which is so incredible. We minus your mortgage payment, whatever interest rate, 6.5%, 7%, whatever, typical taxes, insurance, property management fee, 5% vacancy, 5% maintenance. Although this is a brand new house, it's very, the maintenance will be very, very minor, we hope. And then of course you have to also pay, like I said, you have to also pay the marketing fee to Pad Split. Pad Split is the partner we use, who can get the tenant in for us. They do all the pre-screening, they do all the marketing, they do all the rent collection, the whole 9 yards. So you can become a turnkey investor. You know what that means by turnkey investor? You have a prospect who's going to help you market and collect the rent, take all this labor intensive work out of your out of your system. And also we have co-living property management also charging you 8% of your rent as well, so they can manage your property regardless of where you live in the country. This is a turnkey, almost passive investment methodology. Isn't it amazing? So our anticipation on a per month basis as a landlord owning this turnkey new construction, extremely high cash flow co-living model in Florida or elsewhere that we're promoting in the foreseeable future, the total time you spend per month in taking care of this one property, maybe 1 to 2 hours per month. So therefore allow you to scale your real estate so you can retire in 1 to 3 years with $5,000 to $10,000 monthly net passive income. Okay, so did I stutter? No, I don't think so. So incredible, right? All the expenses, we have covered all the expenses. At the end of the day, you collect 14 grand gross rent, and your monthly, this is incredible, $5,000 monthly net passive income when you close property. So again, my initial presentation at the beginning of this video, I said you can retire within a year, right? Within closing escrow, $5,000 net income. Can you retire all 5,000? To a lot of people, yes, right? You can live for $5,000 with or without a W-2 income, maybe a part-time income W-2 somewhere, right? So your job is whatever job you have, part-time or full-time, you have the ability to make your work, your job optional, not a necessity. Okay, so is it made? But wait, there's more. This is just the tip of the iceberg. Okay, let's say you're not ready to retire in 1 to 2 years. Okay, off only $5,000 monthly in retirement. Okay, here's the another caveat, which is this is getting so good. Okay, let's say you have a 5 or 10 year retirement horizon. Okay, which most people in that case, I don't know, right? If you're young in your age 30, age 40, you're not ready to retire yet. So you need to scale your portfolio and all that. But look at this. All you need is one down payment. The single family home I alluded to you earlier, up here, okay? Co-living model with the monthly and or duplex. All you need is one down payment. The rest of your uh, uh, scaling and recycling your real estate portfolio is none of your money anymore. Why? Very, very simple. On this duplex, you're already collecting 5 grand. On an annual basis, your net profit is 60 grand. Okay, this is your money in your pocket. So this $60,000, you can use this $60,000 as a 20% down payment, as a 20 as a 20% down payment to buy this single family home co-living property and trigger another 2 grand of net monthly cash flow, right? So every year you could you could you could use this $60,000 of annual net profit at least to finance another co-living single family home or any other kind of home you want to buy. I don't care. You can buy a short-term rental, you can buy a traditional long-term rental with annual lease for a family. You can buy another property for midterm rental, whatever you want. But e- everything is going to come from this amazing monthly and annual net cash flow. Look at this, cap rate is 16%, annual ROI is at least 41%. That's a no-brainer. And furthermore, because we are investing in fast growing growth market, such as in Florida, in this case, Jacksonville, Florida, and the other Florida market we're going to enter into later this year and for the foreseeable future, also fast growing market with population and job growth and migration growth. So we expect 5 to 7% appreciation on this kind of property, in addition to this amazing cash flow. So therefore, having said that, what's another way you can recycle your equity and cash out and buy more rental property, either co-living property or not, in addition to the 60 grand you can buy. So every year, the $60,000 of monthly net profit from these duplex, every year you can buy another rental property, as I alluded to. So if you have a 10-year retirement, you can buy 10 of these at least. If you have a 20-year retirement, you can buy 20. Then what is your do the simple math? What is your retirement income at 10th year? $30,000, $40,000, $50,000 per year in realistic passive income? What about in 20 years? Okay, I mean, it's just infinite. Your cash flow and your retirement and your wealth building is infinite, right? So another way you could scale your portfolio, giving 5 to 7% appreciation on these two property. Like right now, you are already at 80 to 75% LTV, loan to value, right? So I don't know, I may be talking a little bit of too advanced for some of you, but you can refinance tax-free loan, tax-free refinance your existing equity from your existing property around 50% loan to value. So you are already at a 25% position in the next 2, 3, 4 years. You think your property going to grow at 7% in the next 3 to 4 years? Do the math. 20 to 25, 80% or 75% LTV right now at 5 to 7 appreciation growth in the next 3 to 4 years. Each of your property right now, you can reach at around 50% loan to value. Then once you reach this level in a few years, you can do a tax-free cash out refinance, use the equity as a down payment to buy more properties. So you can scale multiple times in the next few years. I mean, what a way. This is the fastest way to build your real estate portfolio. Isn't that absolutely amazing? Okay, one more thing I want to finish up. Okay. Okay. Now, let's talk about tax benefit. It's just okay, I'm talking high level. Some of you may not fully understand what I'm saying, but using the same strategy, you can become a realistic. I know I'm not a tax advisor, consult your tax advisor, but some of our investors are using this strategy. You know the aspect of real estate professional status, real estate pro reps, REPS. Normally, pat, uh, passive losses, realistic depreciation can only offset against passive income, your real estate. You cannot offset against your W-2 income, right? But in this case, if you qualify as a real estate professional, the ideal scenario, I'll be real high level. The ideal scenario, if you're married filing jointly, one spouse have a very high W-2 income at a 31% tax bracket, whatever. You're making $300,000 per year, or even 400, 500K, whatever, or even 200K. That's even okay. and the other spouse is working part-time or no time, a non-working spouse, you could use the non-working spouse to become a real estate professional. All she or he has to do is uh, do a material participation hours for 750 hours per year, which is equate to 15 hours per week in material participation, okay, and do whatever real estate work 15 hours per week, which is not hard. So therefore, you're essentially self-managing your property. You can very easily self-manage this co-living model. Because why? Because past split, our marketing team are already doing pre-screening. They pre-screen the tenant for you. They do the rent collection. So all you gotta do is, if you want to self-manage, is that you do the regular things like a real estate investor, like you do, talking to clients, do some minor renovation, do some communication, this and that. So you can come up with those uh, 15 hours per week. Assuming you can do that, all the depreciation. Oh, one more thing. You do normally you get paper loss depreciation along like a slowly, like 27 and a half years. Very, is a good but slow depreciation. But if you do 100% bonus depreciation and you do cost segregation, then you can accelerate your depreciation paper losses to offset against your working income, which is massive. All right. So, so especially if you're in a high income situation, let me give you the example again. So the answer is yes, let's use this scenario, okay? Let's say you qualify as a real estate professional tax status. So, okay, 20% of the price is land, so you cannot depreciate land. So, you take away the land. Let's say you're down to like 500,000. So the basis for depreciation is 500,000. If you do a cost segregation, if you do 100% bonus depreciation, the first year you can. I'm gonna use a ratio like a 40% ratio. You can accelerate 40% of the price of the structure of the property. Okay, 40% multiplied by 200,000, right? We're talking what, 80,000. So you can potentially, if you qualify, like I said, I know, bear with me, you could write off $80,000 using cost segregation and 100% bonus depreciation. $80,000 of paper write-off to offset against the W-2 income of the working spouse. This is incredible. The IRS and the government is incentivizing you to do this kind of thing. So these rules are available for you if you do the right thing. So $80,000 depreciation. If you at a 31% tax bracket, so let's do the math. 80,000. So what is it? Oh, I need my calculator. So 80,000 multiplied by your tax bracket. So that $80,000 of passive losses can offset against your W-2 income, right? So instead of paying taxes on $300,000 of the W-2 income for the year, 80,000 minus 80,000. So you're paying taxes on, uh, in this case, like $220,000 per year. So another calculation you can do is $80,000 multi, uh, multiplied by your tax bracket, which is, let's say 30% federal. We're talking what? We're talking like, oh, I need my calculation. So 80,000 multiplied by 3. What? Oh, I forgot. I mean, is it 24,000? No, okay, hold on. Let me see. Let me look at this situation again. So $500,000 is a basic for depreciation. You do 100% bonus depreciation. 500,000 multiplied by 30%, which is 150,000. I'm sorry, 150,000 can be write off in the first year. I'm sorry, $150,000 is a write-off, right? 30%, which is, 5 year, a lot of your items, when you do a bonus depreciation cost segregation, the all the like some items are segregated, like a 5 year, 7 year, and 10 year depreciation write-off, right? So 30% of the items inside your structure can be accelerated in the first year, around 30%, give or take, right? Maybe even 40%. So 30% multiplied by 150. I think I'm right. Okay, sorry about I just crunching the numbers. 30% you can write off the first year on the bonus depreciation multiplied by 150K. We're talking about like 45. Yeah, I got it. 40, around 45 to $50,000 of tax savings in your pocket. Let's say 50 grand. 50 grand additional in your pocket. So in this duplex case, you spend 120,000, you're already getting a return of $60,000 passive income. The IRS gonna write you a check, kind of in a way, 50,000. So 50,000 add on to the $60,000 annual profit. So your first year profit is like 110,000, right? Does it make sense? Your tax write-off, lump sum, accelerated, you can get the equivalent of $50,000 savings, dollar for dollar savings. So 50 grand plus 60 grand and net profit is 110,000. Divide by your down payment 120K. So therefore, your first year return on investment is around 100%. 100%. This is mind-boggling. Of course, consult your tax advisor. Not everybody can qualify to become real estate professional status. Even if you don't, you can still get some tax savings with a regular paper depreciation write-off to against your passive income or even against your W2 income, depending on your income level. I'm not going to cover that. Look, at the end of the day, based on the example, the real life example I just shared with you, you can retire, can you not? Within a year, within a few more years from now, within 10 years, based on this methodology. Make sense? Okay, I want you to digest this presentation. I'm a little bit off today, but you get the idea. You get the gist of what I'm trying to convey to you. Think of it. What other way can you achieve wealth this way, right? If you invest your money through mutual funds or 401k, you need $1 million to $2 million. You need $1 million save up in order to trigger $5,000 monthly income, right? You talk to any financial advisor and they'll tell you that. But in this case, you don't need to accumulate $1 million of mutual funds or 401k to trigger your monthly retirement withdrawal of 5 grand. All you need is to finance, use leverage, use amazing real estate asset class, which is it's just a game changer using the co-living model that I'm sharing with you. This is a game changer. It'll change your life. It'll change your wealth building. It'll change you can retire early so you can do the things that are important to you. In my case, I travel full time all these years. I cruise, luxury cruise, all those things. And my real estate portfolio is pretty much passive. I spend 1 to 2 hours per month in so-called managing your portfolio. You can do the same thing using this co-living strategy, right? So I know I give you a lot of information. I want you to digest, take a deep breath, play my video, replay it over and over again, and continue to get educated. This is real, it's happening. Our investors are doing this, as we speak. There will be more mom and pop landlords gonna embrace this amazing new real estate asset class, co-living investment model, new construction, grounds up. Very, very few providers are doing this with the new construction, okay, as I talked to you earlier. All right, hopefully you'll receive a lot of value from this video. Please like and subscribe to my YouTube channel. And also, if you have not already done so, put your email on my website so you can become a free member of our real estate investment community. So you'll receive free investment information, education, the whole 9 yards. And who knows, you could be that person that could implement the strategies I just shared with you, and you would not regret it. This is the best decision you're ever going to make in your life if you qualify. I know there's a big if, right? Thank you so much. Have a nice day. I'll see you next time. Bye-bye.